Good morning, I'm Alex Lydall, Head of Dealing at Foenix Partners, and this is your weekly update. So, clearly the focus this week has been on the Italian referendum. On Sunday night, Prime Minister Renzi lost power in that he didn't get his vote for a constitutional referendum. Now, with a 70% turnout, that was quite significant. He lost by an almost 60 and 40 split. What does this mean for the currency markets? Well, the euro sold off quite significantly initially on Sunday night and Monday morning, hitting a euro-dollar low of around 105. This meant that sterling euro pushed above 120, giving some clients opportunity on the euro buying side. In terms of what this means going forward, a new government will be formed in the coming days. Renzi has resigned, but will potentially be in power for the next couple of days until the budget bill is passed by the Senate, and that was from the President's request. So, in terms of what that might mean for markets, it's made markets a little bit more nervous, although the euro has recovered quite significantly in the last few days. It is more who gets in on the political front. If we have the Eurosceptic party get in, run by Mr. Grillo, then there could potentially be an EU referendum that comes into place at the start of next year. There is, of course, on the Eurosceptic side, if that does occur, there is the potential that we foresee a domino effect of sorts from the French election and German election, and then also the Netherlands next year. So there is a little bit of worry on that side, but markets have been a little bit steadier than we probably expect. Bond yields haven't increased too much, and the euro hasn't sold off as dramatically as we would have thought. So the rest of the week, the focus is very much on the ECB press conference. That is tomorrow, where Mario Draghi will make his interest rate decision from the ECB. And then 45 minutes later we'll answer a Q&A and give the press conference to the public. Now, the significance of this running into year end is whether or not he increases the bond purchasing that the ECB currently do, that is quantitative easing. Now, there is a bit of scepticism and a bit of rhetoric in the market that might be extended by 6 months, so past March next year. If that was the case, a lot of people would probably expect the euro to weaken, but as we saw at the end of last year, that doesn't always occur. So the focus is very much on the ECB tomorrow, and a lot of traders and investors will be looking around early tomorrow afternoon for opportunities to get into the market. Other than that, we have had Theresa May, well, not Theresa May specifically, but the Brexit negotiations in the Supreme Court. We're in the third day now, and that is likely to run until tomorrow, but we won't likely get a result until January. So unless any specific comments come out there, there's nothing that is probably expected on that front. So sterling euro has come off from the 120 mark down to around 117. So opportunities for the euro buyers have, for the short term, possibly been surpassed. Other than that, it is very much political driven with very little data. So that is it for this week. Thank you very much. I'm Alex Lydall, and all the best.